Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market psychology video where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today, we're taking a look at the crude oil futures. Now, the crude oil futures, we had a lot of interesting movement today, and a couple things that we really want to keep our eyes on when we're looking at this type of momentum and this kind of shift in play where you've got a range making a new low into a new high, into a new low, this back and forth kind of playground that the market seems like it's stuck in. Now, looking at yesterday's movement, it was bearish, but kind of flat towards the end of the day. They didn't really get a whole lot accomplished there, and you can see the valuation index showing very little movement, except one little blip at the very end there, and that's about it. So with the valuation basically diving, hitting a bottom, we open up with a gap down. The market didn't see any value yesterday in that move down, so why would they now? And that's a good clue in terms of what to expect. Now, again, buying the very first candle of the day, or even the first few candles of the day, tends to be very aggressive. I'm not a big fan of getting in too early. I would rather let the market tell me what I should be doing, and then follow along with what it told me. The overall momentum that we had here, nice continued grinding higher, and then a huge bear spike lower, all out of nowhere, right? This one big, massive bear bar took over pretty much the entirety of the morning session. And that's just, it's too much too fast. If we look a little bit lower, we can see that, well, a couple things kind of disagreed, right? We have a very large chunk of valuation coming in, but our force index not showing anything. It's not telling us that there's no real increase in price in terms of force, so we don't really believe this breakdown, and that lets us become a buyer on the close of that move to rally back up to a new high. Now, once we made a new high, we get a quick little tap of the highs and a little bit of a failure. And that's a little bit concerning given the overall momentum has been, well, kind of bullish, but they took back a lot of it here. Are they going to fail? Are they going to continue, right? What are we kind of waiting for here? And then we get a nice bear candle down showing that the sellers may want to try to fail. And what do we have? Force completely falls apart, value completely falls apart. Nobody believes that move down, and that makes us believe that this is going to be a trap, and that allows us to become buyers into the move up and rallying higher. Now, we did have some news coming out of Russia here, which caused a quick little spike higher, but that spike higher created a topping formation that was a huge exhaustion peak. They filled the gap, they blew through it on news, and that ended up closing way down here. Why would that happen? Not to mention the fact that the force index barely made any new highs, but the value index made a massive new high, showing that there was a huge amount of profit taking, maybe a huge amount of stops, but regardless, there isn't much force behind the move. There's a lot of value because the candle is huge, but there's not really much force behind it. And once again, on a range type day, we don't believe it, and we look to fade into the move and drive the market back down. Beautiful move back down, but before it made it down there, it pushed down into the prior low of day, prior week's low, gapping area, all in the same area, and caught some nice bouncing. Now, there's a lot of bearish pressure coming in here, so really tough to want to believe them for the initial bounce, and it fails. Comes back down and gives one more opportunity to dive in. Now, I wanted to mark this one because I feel like this is one that would trap a lot of people. We have a really strong bear dive lower after trapping in the buyers, and what do we have in this situation? Well, we've got a lot of bearish pressure, and the buyers have a secondary attempt to buy long. And it's a beautiful candle, don't get me wrong. Honestly, it wouldn't hurt my feelings to see a bunch of people taking this trade because the risk is so small with a stop underneath the lows. But there's a couple things that really stand out on this one that would have you believe, well, maybe this is more likely going to be a trap. Now, first of all, big engulfing bear candle. A lot of times with big bear engulfing candles, you get a pullback. Sellers don't want to sell way the heck down here because most of the move has already happened. Not to mention that we have a large amount of bearish pressure on the downside, and the buyers aren't able to get really anything of consecutive move before the sellers take it right back down. The most they're able to get is 2 candles, and then it's slapped right back down to a new low, taking back that entire rally. And once again, we have 2 candles, and yes, there will be buyers above that, but in context, it doesn't make much sense. If we look down below as well, we can see that the force is slightly increasing, but the value completely decreased. Nobody has any faith that there's value in going higher here, and they're not really kind of showing up to the party. And that allows the buyers to try to come in, and it inevitably ends up being a trap. Now, there is plenty of opportunity to get out of this with a minimal loss if you did end up taking it, but knowing that situation, knowing that context, really told you what was going on and allowed you to sell here instead to drive the market back down and stop out all of the buyers who weren't following the rules, who weren't paying attention, and who didn't get out on time. Now, afterward, we had a good continued drop lower, and that big drop down gave us one final one going into the lunchtime session with a MVFI spike at the bottom, showing us that the move was very likely done, and that allows scalpers to go in against the move to come back up for another quick little pop higher. And now, once again, kind of rinse and repeat. The same thing happened here, very tight bearish aggression. Now we have very tight bullish aggression, and we're kind of switching gears here a little bit. So kind of an interesting scenario that we find ourselves in going into the lunchtime, but overall, a range day, and we know what to do on ranges. Buy low, sell high, stay out of the middle as much as possible, and if you're reading it correctly, you can get some pretty solid moves. So that's going to do it for this one. Hopefully you learned something, hopefully you found it interesting, and we'll see you next time.